Hi, I'm Harry Baker, I'm a poet and a mathematician, and I'm here at the British Museum to learn more about money. In this episode, we're looking at credit and debt, getting to the heart of how banks themselves make money and actually function as a business. So you've looked a bit at the origins of money. When did the concept of debt first come about?
Well, debt is actually fundamental to the very origin of money. People's personal relationship with debt today is often with the banks. And so this medallion here actually shows a Roman banking scene. 1,800 years ago, we have a scene here of Roman bankers standing around a table. Now, Rome actually had a system of banking where you could obtain loans, you could be given credit. If you were wealthy, you obviously got a greater access to credit. If you were poorer, you would have to pay more and you'd have to go to money lenders as opposed to bankers.
Most people have to borrow money at some point during their lives. I'm here to talk to Caroline Hamilton from the Money Advice Service about debt. So what are common reasons that people borrow money?
Well, there's actually two main reasons. One is big life changes, like maybe buying your own home or getting married or maybe buying a new car. And then the other common reason is when things go wrong, maybe falling ill and coming out of work for a while, or finding that you've got a big expense to cover that you weren't expecting, maybe like replacing a washing machine or another big household appliance.
And if I wanted to take out a loan for a car or something, what's the best way to go about that?
So the first thing to do would be to look at what you've got coming in and then look at everything that you need to spend out on, like your rent or your mobile phone contract. And whatever you've got left over, after you've covered all of those essential living costs, that's your disposable income. So that's the money that you can spend how you want to. And the other thing to do is to make sure that you are really clear on how much your monthly payments are going to be and how long you're going to have to pay them back.
And what do you do if you do get into trouble with debt?
People like me who are debt advisors really want to speak to you at the point where things become difficult.
Yes.
We don't want you to leave it and struggle on and find yourself in serious trouble before you seek help.
So you need to ask the right questions and plan ahead when borrowing. But did you know that banks can decide whether or not to loan you money based on your financial history? This is called your credit score, and I've never really been sure how that works. So I'm quite excited to be joined by Justin Bassini from ClearScore to find out more.
So you can think of a credit score a bit like a game. So if you've never used any credit, so if you've never borrowed any money, you start off with a score of 0. And as you pay money back and as you use credit really well, you get points. And the more points you get, the more high your credit score is and the more banks will lend you.
So I got a student credit card, didn't want to use it because I was a bit afraid of the debt.
If you've never used credit, a bank can't tell whether you're good or bad at paying credit back. So with your student credit card, it's good to just use it a little bit, pay it down by direct debit, and so you're proving to the banks that you can borrow money responsibly.
So how can you get a better credit score?
The thing to remember is that scores aren't just based on credit cards and loans. They're also based on if you have an overdraft on your bank account, things like mobile phone bills, utility bills. So you need to make sure that you're paying your bills and you're acting financially responsibly. The more you do that, the higher your score.
What are some of the common ways that people get a bad credit score?
You miss a payment, they give you a credit card and you have, let's say, £1,000 limit on it, and you're constantly maxing it out. That's a signal that you might be what's called credit hungry, and all those things can reduce your score.
So you can think of your credit score a bit like a game, but it's a game you play your whole life, and your score can affect your ability to borrow in the future. And what if you do want to borrow? Well, I'm here at Citi to find out more. So say I did want to borrow some money, what different products do banks have that are available?
With a credit card, you have the physical card that you get from the bank. You borrow money, but you have to pay back that money or a minimum amount of that money by a certain date every month. When you borrow from a bank or another financial institution, you have to pay a bit extra on top, and that amount is called interest. If you choose to pay the minimum amount, then you incur an interest payment on the money that you have not paid off. If you want to borrow larger sums of money, then you would probably take out a personal loan. Often, the length of payment, the amount of time you have to pay is longer. The important thing to remember about all of these products is that you should ask the bank lots of questions, do your research independently as well, stay informed, stay in control, and then you've got nothing to fear.
So banks provide a variety of services that can be extremely useful. But obviously this costs money. I'm off to talk to economist Philip Booth about how banks make their money.
Banks charge interest on loans that they make. And the lowest rate of interest, if you like, that a bank could charge would be what's called the base rate, which is the interest rate which the Bank of England, the central bank, sets. Then on top of that, of course, there has to be a margin for expenses. And then thirdly, there has to be a margin for risk. So whenever a bank lends out money, there's a risk that it might not get the money back. And then, of course, there's a profit that the bank needs to make to provide to its shareholders, providing the capital which allows the bank to run.
It's important to evaluate whether or not we need a credit card or a loan. And remember, there is such thing as good debt and bad debt. What I've learned is that when done in the right way, repaying a loan or using a credit card can actually improve your credit score. Whatever it is, we have to ask the right questions when we take on any financial project and think about how it might make us feel. In the next film, I'll be looking at savings and interest. I'll see you there.